If you have been wanting to learn about ICT liquidity or liquidity in general, then this video is for you. I will explain literally everything that you need to know about liquidity, about what it is, where to find it and how to trade it. Also something very excited, make sure to watch till the end because I have a giveaway inside of this video where I will be giving away a funding challenge. Without further ado, let's get into it. So first things first, what is liquidity? Liquidity refers to the efficiency or ease with which an asset or security can be bought or sold without affecting its market price. So this is basically just the definition of liquidity. It's just handy to know before we get into the strategy. Now, where to find liquidity? Before we can find liquidity and before we can identify liquidity, we need to know some things first. First of all, we need to know what a swing high is. So a swing high is formed when there is a high with a lower high to the left and a high with a lower high to the right. Exactly like this example here on the right of the screen. Secondly, we need to know what is a swing low. A swing low is formed when there is a low with a high high to the left and a low with a high high to the right. Exactly like this example right here on the screen. Now that we know those things, we can search for liquidity. And we can do this in two places. The first one is buy-side liquidity. With buy-side liquidity, it is very important to think like the algorithm. And not only with buy-side liquidity, with liquidity in general, it is very important to think like the algorithm. As you know, ICT traders are very algorithmic traders and they believe that there is an algorithm that is pushing price to certain directions. So your job is to try to think exactly like that. So right here, a swing high at the top of the range will have a buy stops above it. So these are stop losses from short positions. So as you can see in the example right here, this is the range that we are looking at, and that is the buy side liquidity in this case. As you can see, when buy side liquidity gets taken out, we see a reaction to the other side. Secondly, we have sell side liquidity. Sell side liquidity, again, it is very important to think like the algorithm, also with sell side liquidity, with liquidity in general. So in this case, a swing low at the bottom of the range will have sell stops below it. So these are stop losses from buy positions. If you are a buyer in this case, and let's say you have bought right here, where would you put your stop losses? Underneath the swing low. So what is price going to do when we want to push higher and we need liquidity to make sure that we reach certain points? We are going to take out those stops. We are going to take out those sell stops underneath the previous swing low. So that is what I mean with think like the algorithm. You need liquidity to create bigger moves, to create bigger pushes to certain directions, to break previous highs, for example. We're going to take out sell side liquidity because this is going to bring money into the markets. Then we have the types of liquidity. First of all, we have our relatively equal highs and lows. As you can see in this example on the right, we have two highs that are relatively equal and we have two lows that are relatively equal. So price reaches relatively the same price more than once. So this can also be 3 times, sometimes even 4 times, and we would still call them relatively equal highs. Some people think there's only 2 highs. No, we can also use 3 or more. In this case, equal highs indicate the buy side liquidity. So using what we learned before, equal highs indicate buy side liquidity. And equal lows indicate sell side liquidity. Very easy, guys. And if you don't understand something, please go back, take notes of everything. I made this presentation as easy as possible to follow along so that you have all of the information needed to use inside of the live markets. Then, secondly, we have unmitigated highs and lows. So these are old highs and lows that have not been reached. As you can see in the example on the right, that's a high that has not been reached. Once we have reached it, we have a huge reaction to the downside. Unmitigated old lows that have not been reached before get reached, we have a reaction to the upside. And guys, remember this, and this is something that I see a lot of people do wrong. Whenever they see an old high or an old low being taken out, they're going to target the other side immediately. Like for example, if this old low is get taken out, they're going to target the old high immediately and vice versa. And yes, this can work. As you can see in this example, it would have worked. But guys, this takes so much time before you reach your target. And if you are okay with that, if you are a swing position trader, then by any means do that. But if you are an intraday trader, just use this to your advantage to know where reactions can form. So right here again, old highs indicate buy side liquidity and old lows indicate sell side liquidity. Then next we have our session highs and lows. Session highs and lows can indicate either buy or sell side liquidity. As you can see on the example on the right, we have our Asian highs and lows and we have our London session highs and lows marked out. As you can see, when Asian low gets taken out with a huge reaction to the other side, Then we take out Asian high. We have again a huge reaction to the other side. London low gets taken out. We have a reaction to the upside. And after this chart had ended, we were going for the London session high. I know it says low, but it needs to be high, of course. Then I've listed, as most of us trade New York or London session, we won't mark out the New York high and low because there is no point. Whenever you're trading New York, the New York high and low is still forming. And whenever we're trading London, we will watch the Asian session high and low. Next, we have our previous day highs and lows. So previous day highs and lows can indicate either a buy or a sell side liquidity. This chart is taken on the 1 hour time frame. As you can see, when the previous day high gets taken out, we have that huge reaction to the other side. Again, from this point, we are not going to look for a whole switch in bias. We are just expecting that reaction. Next, we have our previous week highs and lows. Can again indicate a buy or sell side liquidity. This chart is taken on the 4 hour time frame. As you can see, previous week high gets taken out. And as this is a 4 hour, this takes a couple of days of consolidation. Of course, after such a huge trend up, there will be some consolidation in order for liquidity to gather and to make itself ready for another move. And then we go to the downside. After this chart, we were also going for that previous week low, but that happened a couple weeks later. The most important thing, what you all are asking for most probably, and I hope you have taken notes and I hope you have written everything down that we did discuss till now. So now you're ready to go over to the next spot. How do we trade liquidity? We are going to trade it by using a liquidity sweep. So the algorithm is looking to sweep stops, and so should you. Like I said before, you want to think like the algorithm. You want to think, okay, where are people buying? Where are people selling? If they are doing that, where are they putting their stop losses? What are we going to look for? We are going to identify bias on the daily time frame. After that, we're going to identify the buy and the sell side liquidity that is within that range. We are going to use the right timing. If price is bullish, we are going to buy the sell stops. If price is bearish, we are going to sell the buy stops, and we want to see displacement. So this is something that a lot of people struggle with, and I know this, and that is the daily bias. How do you identify the daily bias? Really simple, guys. So how do we identify the daily bias? We want to look for displacement in the market on a daily time frame. As you can see in the example on the right, we have this displacement right here. I know this is not the best example of displacement, because this is a very good example of displacement. I would say this one still counts as we are breaking previous highs. That is the next point that needs to be happening. Displacement needs to break previous high, previous low when we are bearish. And in this case, guys, the daily, the weekly is very bullish. We come inside of an OTE entrance and we turn around. Again, another strategy, a bit more advanced, but that's the reasoning after this displacement right here. That's a bit of the story why it happened right here, I would say. So you want price to come back into a discounted area. So underneath the 0.5 or the 50% and above where I'm bearish. So as you can see right here, I have used my Gambox tool from 0 to 1. And that is from the start of the price leg, that is the displacement leg, to the top of the price leg, that is the displacement leg. We want to see price come underneath that 50% right here. And keep this point in mind, because this will come back in another slide soon. So we want to see price come back underneath that 50%. Now we want price to be in a fair value gap, and this is highlighted in gray. So this is a fair value gap. If you don't know what a fair value gap is, a fair value gap is basically an imbalanced point in price, what we believe that price wants to rebalance over time. So as you can see right here, we have a huge wick on the left, we have a huge wick on the right, and nothing in between right here. So this is our imbalance zone right here, highlighted in gray, and we believe that it is going to rebalance this. And this happened right here. This chart is on the daily time frame. Now the next thing is that I know a lot of you struggle with which liquidity should we take? How do we know that we need to take this buy side? How do we know that we need to take the sell side? Why do we need to base this on? Guys, the beautiful thing about this ICT strategy, about this ICT model, is that it is time based. And that is how you should approach your trades. So you're going to use the right timing, and you're only going to apply everything that I taught you inside of these time windows. So these time windows are in New York Standard Time. For the New York session, you want to be looking for 8:30 till 10 a.m. And in the London session, you want to be looking for 2 to 5 a.m. New York Standard Time. Lastly, we come to our entry, and this is basically where everything comes together. So we're going to take the trade in the same direction as our daily bias. Of course, in this example, this is the same example, what I said you to remember. So you can see there's a daily fair value gap, that gray highlighted area. We want to take it in the same direction of our daily bias that was bullish. So if the bias is bullish, you buy sell stops, and if the bias is bearish, you sell buy stops. Then you want to wait for price to enter the kill zone time. I didn't mark it out right here, guys, but this is New York kill zone time. This was around 9 a.m. in the morning. Then we want to wait for displacement in the way of our bias. As you can see right here, there is a very strong displacement in the way of our bias. Then we want to zoom in on a lower time frame if needed when the risk to reward is not 1/2. This is already zoomed in. This is on the 5 minute. I know it says here on the daily time frame, but it needs to be on the 5 minute. This is on the 5 minute. Then we're going to enter on a breaker block. If you don't know what a breaker block is, look that up. I'll make a video about that another time. Then stops underneath the breaker block, and we're going to take our profit on the opposite side of the liquidity. Of course, you can make this to your liking. You can exchange a breaker block for a value gap or anything like that, or an order block. But I would recommend you to follow it along exactly like it is. So now that we know all of this, we are going to use this inside of the live markets, inside of the backtesting markets. So we're going to take this inside of FX Replay and show you exactly how it works. Let's pause the video for a second, because if you're going to trade a strategy, or basically any strategy at all, and you're not trading a funding challenge, then you better have a good broker with low spreads and low commissions. In this case, I would recommend Henko Trade. As you can see, Henko Trade has very low spreads and very low commissions. You can already start from as low as $10 and you have up to 1/500 leverage. As you can see, Henko also offers a 100% deposit bonus. So let's say if you're depositing $500, they will match that with also $500, giving you $1,000 in trading power. If you're interested in any of these things, check out Henko Trade, link in the description. Okay, so I have a feeling this video is getting quite long already, so I will show you a quick example on FX Replay. To show you it's not Fugazi, I'm just going to show you right here. We are going to create accounts together. Let's do 100k. That's the easiest that I always work with. Let's just do Euro USD, since this is the best and I would say the most accurate pair for any strategy to occur on. I would say Euro USD, GBP USD, and my personal favorite GBP JPY, but it's a bit of a difficult one sometimes. Let's do, I don't know, maybe last year and then what, middle of the year-ish, May or something. Let's just start on the 1st of May and then just do it up till now. It doesn't really matter, since we're just going to search for 1 or 2 trades to show you really quickly in practice how it works. Now, first of all, what are we going to do? We're going to go to the daily. As we can see, our daily is very, very bearish. And that is something that I forgot to mention to you guys, but it is something that you want to keep in mind. As you can see, this daily is very, very bearish and it is just plunging downwards. And whenever this is happening, yes, you can wait for price to come inside of the zone, to come above that 50%, to come inside of that discounted area. This will take you weeks, maybe months for price to reach this point sometimes, right? So if you see price doing this, and I have to say that this year, 2023 and also 2022 has been very, very explosive towards one or the other direction. And that makes it really, really difficult for us pullback traders to take a trade above that 50%. So remember, above the 50%, highly accurate trades and high win rates. So risk more on this one. Underneath the 50%, risk less on this one. And this is only when it is plunging like this, guys. Whenever you have like a normal situation, let me see if I can find like a normal situation right here. So let's say, for example, right here, let's say we don't see this, right? Because we came from a bearish trend. Let's say we're just bullish right here. And you see, okay, price took out liquidity right here. We have formed a small price lag right here. Of course, wait for price to come underneath this 50%. So that you know, your chances will be a lot higher if you take the trade from here instead of from here. But when it is just plunging like this and just going down, down, down without giving any real pullbacks, as you can see right here, we did hit that 50%, but it took price almost a month. So in this case, I would say just risk less whenever you're taking a trade underneath that 50%, but always keep that daily bias in mind. So now let's go to the 4 hour. So now we can delete this, but we keep our daily bearish bias in mind. So in this case, if this is going to be the low, let's see if it is going to be the low. I think it might. It looks like it is consolidating a bit. So let's say this is the low and this will be our sell side liquidity. Of course, if this gets taken out, we need to change our sell side liquidity. And in this case, if we are looking at the current price range, this is our buy side liquidity right here. So now we are going to wait until the buy side gets taken out, and then we can take a short position from there whenever we are inside of our time frame. And Guys, you can go as low as you want. Like I said, you want to mark out the buy side and sell side liquidity on the 15 minute at least, or up from there. I just did it on the 4 hour right here. I think this is a very nice zone to wait for until that one gets reached. Let's just speed it up a bit. And let's wait for buy side to be reached. As you can see right here, this previous buy side had been taken out. So you could be the trader that takes the trade from here. I would say wait for the top of the range of the 4 hour trend, since this one will be a lot stronger. And yes, it gets down from there. It took out some liquidity. Doesn't really matter. You can still take that and you can still profit from that, but we want to see price come above this buy side liquidity right here, and then we want to see a reaction downwards inside of our time zone. So right now we are not inside of our time zone. Remember, we are only trading the AM session from New York and London. So right here we are consolidating. This is a very good indication that we are turning around and that price has struggles breaking through this point right here. We want to wait for at least London open, that is at 2 AM. And it is right here. So now we are going to enter over breaker block. First breaker block that I can see is this one right here. So let's just mark that one out. And then we are going to take our entry from there. So entry, let's put our stops above this high right here. And then like I said, guys, we are going to target the nearest sell side liquidity. So in this case, this is our nearest sell side liquidity, this low right here. And this trade will already be massive, like you can see. A nice 1/5 to a rod. You can also go for 1/2, of course. You can also go for 1/2. We do have a fair value gap right here that can be an issue. So if you just want to be sure of your trade, just take a 1/2, quickly in and out. A 1/2 is still the golden formula in my opinion. So let's just put in this order. Let's risk 1% since we are not taking it above the 50% daily range. We are not risking 2, so we're just risking 1%. And let's see if we are. Okay, we're now tapped inside of the trade, as you can see right here. We got tapped in right there. So let's just play it. Consolidating a bit, coming back to entry again. And we're going down, down, down. As you can see, sell-side liquidity has been taken out and we're up 5 grand with one trade. So guys, this was a trade in practice. I can do some more, of course. Not right now, we took out sell-side liquidity, but I think you get the point of this. This is not a backtesting video. But if you guys want to see this backtested, or if you guys want to see this backtested over more data, just let me know. But I would advise you to hop into this charts yourself. I will be giving away 2 25k challenges if you do the following. Follow me on Twitter and Instagram, or I can better say follow me on X and Instagram, and comment underneath this video why you want to win this challenge. Be aware that I will be announcing the winners through Instagram stories, so make sure that you put on those notifications, because if you don't claim the account within 24 hours, it will go to someone else. I hope I can make someone happy with this. I'm planning on doing this much more inside of my videos so that I can give back to the community as much as possible. If you want to check out Funded Next in the meanwhile, or if you're not one of the lucky winners, you can check them out using the link in my description and use code JORAFX5 for 5% off your next challenge. I hope you enjoyed this video and I will see you in the next one. Bye bye guys.